Good morning, everybody. It is Tuesday morning, almost 6 a.m., April 18th, and futures are up. It looks a lot worse than it actually is because we haven't had any dip for 3 weeks. Futures are up 14 points. NASDAQ is up a little close to 100 points over on the NASDAQ. We're looking at QQQ right up in that 321 area right now. I'll cover it real quick. Going back to yesterday, again, small range, back down there below 30 points. Nothing exciting whatsoever, kind of why I put that warning out. Over here on the spreads, never touched that minus 1%, never even got down close to it, which I'll show you again. Today, minus 1%, 4109.81, and this is day 16. 16 days since we have had a minus 1% move. Spread yesterday, 4160, 4155, 35%. Full credit. And everybody now has either had or will have, with this gap up we have this morning, on taking the trade of the week at no less than $3 credit. So we'll go into this really quick where we're at. Yesterday, nothing out there, big nothing burger, completely dead over here with all of our weight. All your oil and gas getting crushed, and banks doing all of the work yesterday. Today we have Bank of America, we have Goldman Sachs, and Lockheed Martin, and after the close we have Netflix. Netflix no longer a large weighted stock like it used to be for obvious reasons. And where we are right here with Netflix, it was down almost 2%. I, again, don't like playing any kind of earnings, but anybody who wants to, you're more than welcome to it. So bring you over here really quickly onto the charts. And here are the S&P futures. We're up 14 points. We're right above that big 4186 over here on the ES. So fantastic opportunity for all of those guys that trade futures that want to get in on a short. I've already thrown in the trade into the spread room, which, again, using pivots, got to play your risk. It's a $3 credit for 0 DTE for today. VIX, down here below 1706, down to the January 2022 lows. So, again, it's all about just biding the time and waiting for it. But here on yesterday, I want to show you here. The reason why, and I've been really strong about this, is your 5-day moving average. I've been through this hundreds of times where you get up into a floating, waiting for an event kind of situation, and any one of your dips always comes down to the 5-day moving average. Show you here as we go and move it to the other days. Here was your 5-day moving average here on Friday. Nothing burger on Thursday when you had your oversold NASDAQ. You see it over here. You see it over here. It becomes resistance when it was down over here when we were down below it a week back on April 6th. So it's what your primary usage is at the moment. Leaving it here and moving you over to the NASDAQ. And what you're looking at over here on the NASDAQ, and the only reason I'm showing this is because what you have over here on the NASDAQ, and it was being very well discussed going into the end of last week, is you have your bearish crossover where your 10-day moving average is above your 5-day moving average. So not a fantastic scenario if you are trying to be aggressively bullish. And again, with your 20-day moving average continuing to move upward, the 10-day being above the 5-day is not a good sign. But when we start getting below the 20-day, which having gone nowhere for so long won't be a hard thing to do, you start to get a little bit more selling pressure. So that's just literally using this for an example to show you how the moving averages can be applied more so than anything else. On the downside to that, okay, because it has taken so long to get to where it is, show you here using a 30-day 1-hour chart. And as you can see here on the 1-hour chart, coming back here to March 29th, okay, from March 29th to now, we've gone nowhere on the NASDAQ. looking right here on your NASDAQ, you have gone absolutely nowhere. Remove your 50-day moving average. Okay, I'll remove the 100-day moving average and remove the 200-day moving average so you can see this a lot better. So there you go. March 29th to now, 3 weeks, nowhere. But when you start coming over and you start looking at your RSIs, and you can see here, obviously, your RSI is very weak, even though you're almost up at that level at 13,200 from back on April 4th. Now, we zoom out a little bit more to the 4-hour, and you can see we are very weak over here on the 4-hour, all the way down here at 58. Come over onto the daily, and here on your daily, again, you can see for very clear purposes, you are extremely weak. You're not up in the 85, 88, 90 area where you can get an extreme bullish run. So where this comes down to are two parts. Number one, we get a dip. It's going to be really easy to get us oversold. We comprise over here and we do the very, very unthinkable and break out to the upside. You've got an extreme amount of room of upside movement that you can have on the NDX, which you can see here has never gotten to be overbought. Going back a year here, all the way back to May, it has never gotten overbought. So, that is one of the bad things is when it takes so long to get a dip and you go sideways for so long, you don't have anything that actually pressures you down. We've been up here at 85 back in August. We've been up here at 85 over here in April on the SPX on the daily. But again, not anything that is pushing aggressively to the downside. So what we're going to need is that quick move that will make any kind of aggressive action that would force this to make a move towards the downside. Now, what I want to do real quick, even though I know I am wasting your time, I apologize for that, is I want to come over here onto where I have been tracking, which is this wave to the move to the upside. 1, 2, 3, 4, and you had your 1, here was your 2. We were looking here at this being the 3. The 3 or the C as we're embarking on the 400-day moving average over here at 4174. The 400-day moving average at 4174. We're banging our heads up here at this 4155. 4154 is your 200 extension coming off this 2-3. 4136, the big Fibonacci retracement there. 4159, big move to the downside from back in February. You've got a cluster of problems over here in this area. And again, having been bullish all the way from back in October, what we hope we're going to get here with everything that is set up for it is a nice strong dip down into this mid 3900 area so that we can get an aggressive big bounce to get to the upside. That's what we're kind of preparing ourselves for. Not looking for this to go down to 3600, 3980 or 3880, anything like that. The count is there for it, but we're looking for a dip and then a better move so that we can get an aggressive bounce play like we had over here in March, bottomed over here on March 13th, and took off. So have a good morning, everybody. Our futures are overbought. We are definitely looking at a good setup for... 'Cause it's Taco Tuesday.